Africa Oil Week returned to Cape Town International Conference Centre in early October. The global community has cut oil production, putting Africa under immense pressure, but it also presents Africa with an opportunity to fill the gap in this market. CNBC Africa's Fifi Peters spoke to Olu Fahijan, Special Advisor to the President on Energy to Nigeria, about their plans to step up their commitments to increase oil production.
I do see that this meeting is happening following a meeting that was held by your ministry with several international oil companies. There was a statement issued where you did speak broadly about the plan for Nigeria to attract some $55 billion or so or to showcase some $55 billion or so of investment opportunities by 2030. You did say that the companies, that 15 companies or so that you had been having these strategic talks with, had committed to investing a portion of that. So I'd just like to understand, coming from that meeting, how do the conversations that you've been having here at Africa Oil Week compare to that? And are there any developments that you can share with us?
Well, thank you for that. I think, this presidency is going to be defined really around how investor-friendly it is. We're very determined to do that because we recognize that it is the deployment of private capital that really unleashes growth and creates jobs and opportunities at the scale that we need it. And so the conversations that we had, and that's why there was a deliberate attempt to engage the private sector investors who are already in our market. Before we attract new ones, let's talk to the ones who are already there, understand what their plans are, and that's what unveiled this $55 billion of investments that they have lined up, of which $12 billion will materialize over the next 12 months. 12 to 13 billion will materialize over the next 12 months. And those engagements have been very helpful and are very consistent with some of the feedback and talks that we've been having here, in the sense that they're ready to make those investments, but they require certain action on the government side, and certain policies and certain incentives to make those investments. We're prepared to take on those reforms, to do those policy reforms as well. A lot of the issues, and there's a lot of consistency in the engagements that we've had here and in the engagements that we had back home, which is really around security. We need to tackle the insecurity in the Delta, and several folks, the two ministers of state ministers of state in the petroleum resources, the president himself, the minister of defense, the minister of state of defense, the NSA are all focused on this issue and are meeting regularly and monitoring this very closely. And we've seen the output in terms of the uptick of in production. It's grown about 200,000 barrels since May. And we'll continue that relentless focus on making sure that we secure critical infrastructure in the Delta. But on the other hand, one of the things that came out of those engagements is the need to deploy more investment for development in the Delta, to make sure that there's more economic opportunity that provides a viable alternative for livelihoods in the Delta, and that they see actual dividends of this massive resource that comes out of this Delta. So the host community funds that has been envisioned under the PIA is an attempt to bring development and funding of that development much closer to the communities, implemented at the community level, so that they own and feel a sense of ownership as well in these of the assets and the community and production, and see the direct benefit of actually making sure that this is a secure operating environment.
Sure. Deployment of capital and fresh capital is something that a lot of the government officials and the business partners that we've spoken to on the channel have made reference to, but a lot of them have also spoken to the fact that this is capital from a shrinking pot, as it were, particularly when you talk about money going into oil and gas. On the other side of it, you speak to bankers and they say that they're not short of capital, they're short of bankable projects. So just your take on that. First of all, the strategy to attract money that is seen to be shrinking in your sector, and a follow-up on the bankability of the projects that are on offer in Nigeria.
I think there's money.
Yeah.
I think there is a lot. If you look at the investment. Energy security has taken priority. Yes, over the last 2 years, there was a lot of hype around the pace of the energy transition. And I think we talked about the a dying oil and gas sector. And that conversation turns out to be premature when you look at the markets today. Mm-hmm. So there's a new window of opportunity. It means that responsible producers, disciplined producers will have capital. Oil and gas regions that have very market-friendly opportunities and compete for capital will have capital deployed to that. We have to be much more responsible in the way we manage oil and gas operations and reduce emissions from that and protect the environment. That's going to be key if you want to attract capital. So you see a lot. That's why we're spending quite a bit of time thinking about how we manage emissions and reduce flares in our operations going forward. You see us talking about the need to make sure that it is a competitive cost environment. No one's going to invest if your cost premium is 40% higher than every other person around you. You're not attractive, and those are things that are within our control and we're taking on. No one's going to go through, if it takes them 6 to 8 months, 6 weeks to 3 months to execute projects in other regions. If it takes you 4 years in your environment, sure, no one's going to deploy capital. That's within your control. And so we are taking on the things that are within our control so we can be much more competitive for capital.
Touching on the point that you made earlier about the energy transition and this just energy transition, I mean, you also highlighted a bit about the work that you're looking to do to include a lot more communities. But what is the energy transition and the just one look like for Nigeria? Because we're getting a lot of commentary about the fact that, I mean, it's not a one-size-fits-all approach, although we are chasing 2030 targets, 2050 targets. But as you see it, for Nigeria, what does that picture look like?
A just energy transition is one that recognizes Nigeria's stage of development. We have over 200 million people. Almost half of them live in poverty. More than 50% of them do not have access to electricity. We need to power development and industrialization at rates that's never been seen before to lift all of those people out of poverty. Energy is at the center of that. So we need to consume more energy, not less. Because we need to consume more energy, we need to make sure it's also affordable. But we're very determined to avoid the sort of high carbon paths that you've seen in the past. We're not going to power our own industrial revolution with coal, as you've seen in Europe or in China. We're trying to power that with gas, which is much cleaner. So that's what a just transition for us needs. That no one's going to penalize us because we're using gas to power our growth, because it's much cleaner. And that it is part of the solution of providing affordable, clean, and reliable energy to not just Nigerians, but all Africans. So we'll continue to advocate for that we need to grow our energy consumption, and that we need to use all of the available resources that we have for us. In South Africa, that must be coal. In Nigeria, that must include gas. But we need to do so in a much more responsible manner, because we know what the impact on the environment is. Now, don't get me wrong, our scale of pollution and our contribution to emissions is nowhere near what's happening elsewhere in the world. So even if we grew our consumption 6 times, 10 times from where we are, we're not the ones who are going to be driving emissions and climate change. But we're very conscious and we want to be responsible. But we need all of this energy to not only power our growth, but to even make sure that we're much more resilient to climate change. It impacts us more than anybody else. You need energy to make sure that you are able to respond to the impacts of climate change that you didn't really contribute too much. So for us, that's what just energy transition means. It needs to be just. It needs to account for the various stages of development, and it needs to allow us to use all of the available resources that we have to power our development, but we'll do so responsibly.
So let's zone in on gas. A lot of private sector gas players here. Yeah, I mean, you spoke about the existing players within your market, but you also spoke about the attracting or the plans to attract new entrants. So just broadly on gas, the kind of conversations that you have been having here with players, and what the investment or the opportunity pipeline is looking like in this part of the market.
So for us, gas is our future. Sure. Nigeria has more gas than it has oil.
Sure.
And we haven't even tapped or scratched the surface of our potential there. So what we're trying to do, with NLNG, we're the 6th largest exporter of LNG in the world. We could be doing a lot more given the resource base. As I said, we're tackling the insecurity issues because a lot of our gas is associated. So we need to make sure that we're able to evacuate the oil in a reliable manner so that the gas is available for export. But we're also growing our domestic production. So what does this mean for an investor, and how do we make sure that we're much more attractive and more attractive environment? For a lot of the non-associated gas fields, there needs to be an improvement. The API did quite a bit in improving the fiscals and making us much more competitive as an oil and gas destination, but there is still some work to be done around improving the fiscals for non-associated gas that doesn't have a lot of liquids in it. And so that is one of the things that we're working very closely on with our finance ministry, our Inland Revenue Service, to make sure we strike the right balance between growing or stabilizing government take, but enabling investments that allow us to have a multiplier effect on the economy and a broader tax base. So we're not necessarily trying to maximize the percentage of taxes that we collect, but we're trying to make sure that the tax that we collect is just the right amount that enables a bigger base for you to tax from. That involves making sure that the other piece that we're working on is the gas pricing. We spent a lot of time looking at the upstream gas prices because of the high cost environment. The prices do need a review upwards because about 40% of the gas that we currently have is not economic at the prices that we've prescribed in law for the domestic market. So we need to take another look at that. And we're working with investors to make sure that we are, and they're open to making sure that this is a managed process, because no one moves from regulated prices to market prices overnight.
Sure.
But we want to demonstrate credibility and make sure that we're taking account that the end user isn't being hit by multiple price increases that drive up inflation and impact purchasing power.
We'll be watching closely, yes, to ensure that happens in the desired timelines in which you have stated. But Olu, thanks so much. We'll leave it there for now.